For the auto industry, 2020 has been a year to forget. Between the April to June period, that is the peak of the lockdown, passenger vehicle sales crashed over 78% after having declined for 9 straight quarters. A recent parliamentary panel report submitted to the chairman of the Rajya Sabha pegged losses for the auto industry during the lockdown at 2,300 crores per day, making it the longest slowdown in 2 decades. The same report also noted that 3.4 lakh jobs were lost in the auto sector during the lockdown. However, the festive season brought some relief, with most automakers seeing a sharp surge in sales, with players like Tata Motors even hitting record highs during this period. Some companies like Tata Motors, Honda, BMW, Ashok Leyland and Toyota have also offered voluntary retirement schemes to a section of employees in a bid to cut costs. But how will 2021 shape out for the auto sector? We're now joined by industry veterans. We're joined by Shashank Srivastava, Executive Director, Sales and Marketing at Maruti Suzuki. We're joined by the MD of Volvo Eicher Commercial Vehicles, Mr. Vinod Aggarwal, and Rakesh Sharma, the Executive Director of Bajaj Auto. Gentlemen, thank you very much for joining us here on CNBCTV18. Mr. Aggarwal, if I can begin with you. The real estate industry body has recently complained to the Prime Minister as well about cartelization in steel and the cement sectors. High commodity prices are definitely impacting the auto sector, especially steel that goes into making automobiles. How is this impacting margins and manufacturing costs of commercial vehicles? Mr. Aggarwal, I'll begin with you.
Absolutely, there is some scarcity in the availability of steel, and already till last month, I think around 15 to 20% increase has happened in the flat steel products, and then of course spot prices are very high. So even if you want to buy from spot markets, the prices are very high. As a result of that, there is more pressure on the companies to increase the prices. So therefore, I think it's highly inflationary, and so steel definitely is having major impact on our costs. And on top of it, we have, as you know, BS6, the costs had gone up. We had increased the prices, or costs had gone up by around 10%. On top of it, now the steel has impacted us very, very badly.
So on an average, sir, what do you think will be the price increase for commercial vehicles?
For commercial vehicles, like we have already done, I think 1 or 2 increases after BS6 increase. And now, of course, we are looking at another increase from January. So 1.5% to 2% increase further will happen. So it's I can say already around 4 to 5% increase has happened, and another 1.5% is going to happen. So this is on top of the increase that happened due to BS6.
Right. So you're saying on an average for the commercial vehicle sector, there will be a 1.5% to 2% increase in prices starting January. Mr. Shashank Srivastava, if I can begin to you, Maruti was perhaps the first company to announce a price increase starting January. Could you give us an idea of how big this increase would be? And do you get a sense that this could impact demand as well in Q4?
But I think the genesis of this announcement comes because we have been under pressure on profitability, largely because of the input costs going up. I think Mr. Aggarwal just mentioned when we transited from the BS4 to BS6 emission norms. And also remember, in the car industry, we also had the new safety norms since October last year. So both of them have actually put a lot of pressure. And since last year was not really a great year, last year sales were down 18% over the previous year. Therefore, only a part of that additional cost was passed on to the consumer. And it was thought that probably this year we would be able to do it. However, as you know, the pandemic came and there has been a lot of pressure on sales. Fortunately, the last quarter seems to have seen some green shoots developing. And this year, not only is the past cost increases not been passed to the consumer, we also have this year a lot of increase in the input cost, not only in steel and plastics, but also in rhodium and palladium, those precious metals which are used in increasing quantities in catalyzers which are required to meet the BS6 emission norm. And people do ask us, so what is the big deal about the small quantities? One, they are not small quantities. In China, for example, we have the China 6 norms. In Europe, Euro 6 norms. India, BS6 norms. So the demand for those materials, rhodium and palladium, has gone up substantially. 80% of the demand for those materials, metals, come from the auto industry. And also 80% of the production comes from just the mines in South Africa and Russia, where there has been less mining this year because of the COVID restriction. So on one hand, you have had a demand for those metals going up substantially, and on the other hand, the supply coming down. As a result, rhodium, for example, has shot up from about $2,000 an ounce to almost $16,000 an ounce. Obviously, such large increases cannot be just be absorbed by the manufacturer, and part of those will be passed on the consumers, and that is what we have announced this month, that we will be increasing the prices from January of next year.
Percentage-wise, sir, what do you think on an average, if you can't tell us from Maruti Suzuki, on an average, what do you think will be the practice across the PV sector? What kind of price rise can we expect starting January? And is it going to be more than previous years for the entire PV sector?
I would assume so, because for the reason that the input costs are substantially up. But of course, I am not able to put a figure to that, because we are at Maruti Suzuki still examining which models to how much we can increase. Remember, we have to make that fine line. We have to walk that fine line between the financial prudence as regards profitability, and also the other demand estimation part. So it's possible, if you have too much of increase, it might affect demand. But then we have to look at and make a balance between the two. And that's what we are examining at the moment.
Right. Mr. Sharma, if I can get you in at this point, this high commodity costs of raw materials, including rhodium, palladium, steel, plastic, how do you think this will impact margins and demand, especially for entry-level scooters and motorcycles going forward?
Well, Parikshit, it is in line with my two other colleagues. We are in the same industry, so it is impacting us in a similar way. But, we have to look at this with a 3-year horizon. And when you look at it at the 3-year horizon, in two-wheeler industry, we have faced costs in the beginning from increase in insurance costs, increase in regulatory requirements on braking, then of course BS4 to BS6, and cumulatively there has been an almost 30% increase in costs, and which has been passed on. We are looking at another slug beginning January. So you can imagine that for an entry-level buyer, somebody who's just getting into, motorized transport, it is a severe increase in the cost of acquisition of a two-wheeler.
Right. Some companies have already raised prices starting January. What's your expectation, Mr. Sharma, on the price increase across the two-wheeler sector?
Well, our stance is that we are going to pass on the cost increase. It's just that we are calibrating how much and on which products. That issue is live and under discussion. And we will be making these announcements in the next week or 10 days or so.
Right. Now to speak to you about the ECU shortage, if I can get Mr. Vinod Aggarwal in, we believe that this shortage of electronic components due to the semiconductor shortage globally is going to impact diesel manufacturers more. What impact do you see on production going forward in Q4? Do you think there will be a demand-supply gap in the market? There will be a supply constraints that the industry could face, especially in the diesel segments, Mr. Vinod Aggarwal?
No, definitely there is a lot of scarcity as far as the supply of some of these connectors or ECUs or telematics hardware. So there is a lot of scarcity, and so we are living hand to mouth, and so we lose out on production, and because of this scarcity, we cannot be aggressive in the market. So I think right now we are having both the constraints. On one side, the demand, which is almost now trying to, the industry is coming out of the problems. And on the other hand, now because of the supply side, we are not able to supply. So it's basically, it's double whammy. We are getting hit from both sides. So basically, even if you want to supply now, there is hand-to-mouth situation. So right now, it's basically getting the material by year and just getting in time and somehow running the production line. That's the situation. So it's a lot of stress going on the supply side.
That's an important statement. You're saying hand-to-mouth situation. Hand-to-mouth situation due to the shortage of semiconductors and electronic components. What kind of production cuts do you anticipate, Mr. Aggarwal, as a result of this electronic component ECU shortage?
As of now, we have been able to manage this month. Now, I'm not sure what is going to happen next quarter because there is always some inventory which is there with you. Because of that, this month we will be able to meet our requirements. Let's hope what happens next month because it is something which is we are not getting the final assurances that how much we are going to get, and it is not from one supplier. It is from the host of suppliers who are dealing with these parts.
Okay, sir. So this is going to be a major headwind. Mr. Rakesh Sharma, for the two-wheeler sector specifically, the ECU shortage, there is a global problem. Bosch Continental supply to most automakers in India. How bad is the situation? How will it impact production going forward?
Well, Parikshit, the amount of electronics that goes into a two-wheeler is much less. So I would say it's not such a severe hit, but yes, the problem is that we are having a planning horizon now only of a week to 10 days. We don't know what's going to occur after that. So there is a lot of scramble. There is a lot of management effort which is required. That even those models which are affected, there are consumers out there who are waiting for those models. They get affected very badly. And at this point of time, what we could see is just a week or 10 days. And we estimate that this kind of a situation is going to perhaps go on for the next 4 to 6 months, at the worst, 6 months, at the best, 3 to 4 months.
Right. Mr. Srivastav, Maruti Suzuki, the largest player, is this impacting you as well, ECU shortage, or have you found alternatives in the market?
Yeah, so I think we are doing fine this month, and we continue to monitor the situation. As you said, different companies get affected differently based on the sourcing of the component and also the country from where they source from, as also what fuel type the vehicle is. So right now for December we are fine, and we are making those assessments on a continuous basis. By the way, our supply chain guys are really great, and they always manage some way or the other. So I'm sure we'll have a very limited problem there.
Okay. On that note, we're going to take a short break here. Don't go anywhere. We request our guests to stay on with us. There is a lot to discuss in terms of import issues that the auto sector is facing and budgetary demands as well. Don't go anywhere. This discussion continues. Welcome back. 2020 was a challenging year for the auto industry, and there are several headwinds, even though there is cautious optimism in the market. Let me go across to our guest again. Mr. Sharma, I'd like to begin with you. Bajaj Auto, one of the largest exporters of vehicles in the Indian industry. How is the container shortage actually impacting you right now? There are also issues with regard to rules of origin. How is it impacting manufacturing, exports as well?
Oh, it's a terrible situation on containers at this point of time. As you know, 50% of our production, almost 50% is exported. We need 100 containers every day. And right now, we are getting 90. If we used to get containers within, today it is taking almost 2 weeks to have that plan. And again, containers is one side of the story. there has been such an imbalance in trade flows all across the world that the containers are getting stuck at different places, and freight rates have shot up by 40%. And, sometimes the sailing schedules are being altered. The ships are giving Indian ports a miss. So when I put all of it together, we are being able to export only about 80 to 85% of our confirmed orders for the last couple of months now. And I'm hoping that, again, in the next 2-3 months, these knots unravel and we are able to get back to some kind of normalcy, because we are concerned that sooner or later, all these hard-fought gains in market share opposite the Chinese competitors and others will start to erode, just simply because we are in stock-out situations in many parts.
And in terms of the rules of origin, are you finding it difficult getting components because of the Qatar issues?
Not really, Parikshit, because as I said, we don't have that kind of dependency. It is an issue out there, I know, but it's not a major thing for Bajaj Auto at this point of time.
Now, to get in, Mr. Aggarwal, if we look at VECV sales in November, wholesale dispatches, they were up 3.2%. You said in previous interviews that CV demand is now back to pre-COVID levels. But if you look at April to November, there is a 43% degrowth that continues. It will take time for normalcy to return to the auto industry. What's your demand outlook going forward? How can the government actually intervene? The budget is round the corner. How can the government spur demand for the CV sector? And what's your demand outlook?
No, I think, as I mentioned earlier as well, the biggest boost for the CV sector will come from infrastructure investments. And I think government is doing the right job there, and they are giving out a lot of contracts, and infrastructure sector is getting a lot of focus, and money is getting spent there. So therefore, that is one area I think that is going to boost the demand. And along with that, I think a revival in the economic sentiments. I think that is the second most important area. There again, we are looking at the positive sentiments. People are becoming more and more positive on the economy. As you see, our outlook for GDP growth rates for Q3 is better than Q2, and Q4 is likely to be a growth for GDP. So therefore, based on this economic sentiments and the positivity, we are also expecting more replacement demand coming in. As such, CV industry, as you know, the figures have been till date very, very low. And if you exclude the small commercial vehicles, till November, the drop has been almost 57%. We are just down to, you can say, around 95,000 units of sales, which is around 58% down. And but we were expecting that Q4 we should have a better growth, and so all put together, I think H2 we should have almost equal to last year's H2. But last year H2 base itself was very low, because last year CV industry had dropped by 40%, excluding the small commercial vehicles. So basically, because of the very low first half, it is expected that this year we will have another 40% drop. As compared to the previous year, full year, even if you get around 15-20% growth in Q4. So as such, I would say,
So
going forward, the situation is better, but at the same time, these concerns from the supply side, as well as other concerns on the electronics imports, and so these are the headwinds which may impact the revival. But of course, we have to see that what happens. But we are prepared, and we are definitely from our side, we are trying to put in our best so that we are able to not allow to impact the production, so that we are able to meet the demand whatever is there in the market. And from the government side,
I'll take quick questions now. I'll take quick questions. Yeah. Yes, Mr. Aggarwal, go ahead. What do you expect from the government?
No, I was saying that from the government side, other than the investments in infrastructure, the other scrappage policy, which has been under discussion. So that is another area where if the government comes out with its clear policy on it, and which our demand is that it should be incentive-based policy. I think that can help the revival of demand further.
Right. All right. Mr. Sharma, what do you expect from the government? The budget is around the corner.
Well, I would say that foremost, if the government can take initiatives to rebuild consumer confidence, because at the end of the day, the government knows its revenue and expenditure side. We can't comment much on that. But I would say that if the ordinary middle class consumer receives benefits and receives the confidence that going forward they'll get supported, I think that will be a very, very good impetus to demand being stoked. And I can tell you this is very important to stoke demand. We are at a very difficult situation because at this run rate, we are looking at, we're at FY14 levels, FY19 was the peak, but today we are at FY14 levels. And that indicates to me the headroom which is available in the industry, and through that for tax receipts. But for that, demand has to be stoked, or any measures which stoke consumer confidence will be good. Industry has been making a case for reduction in GST. I think that would be a very, very powerful message, the scrappage policy, and there are a couple of support initiatives, whether it's a PLI scheme or the ROTEP, which help different facets of operations. If all those ideas can be landed and actualized, I think collectively we could then say that we have hit the bottom and things could start to improve.
Right. Mr. Srivastava, my final question to you, very briefly, what would be your demands to sustain growth in the PV sector?
Well, if you look at the recent past, last year was about 18% less than the previous year. And even this year, we are in the final month. So we can say these two halves have been like the tale of two cities, like tale of two halves is what we call them internally. So the first half was 50% down. The second half seems to be up about 15-16%. But still overall down by about 18-19%, I reckon, for this calendar year. So going forward, of course, it's very important. And from a PV point of view, our research over the past 30 years have shown that the demand is very closely related to the GDP per capita income growth. In fact, the correlation factor, if you do a regression, is as high as 0.9865, which is a pretty high correlation. And car buying being but in economic terms, a discretionary purchase requires a very positive sentiment. So sentiments will be affected, of course, by the COVID, I think, in this case. So you could have a vaccine tailwind. You could have a virus headwinds also. But largely anything which the government does, and I completely agree with Mr. Sharma here, which overall benefits and increases the sentiment of the economy, will be helpful. Rural areas, for example, have bounced back pretty well. So I think the current policies of the government in that area are pretty much helpful in reviving demand. And we can look at some of the others like scrappage. We also feel that, while we can't commit on the tariffs, etc., but at least for technologies like hybrid and for CNG, which are alternatives to a low emission, a zero emission sort of thing, but they are very low emission technology.
All right.
There should be some support, definitely.
Okay. Thank you very much, gentlemen, for joining us here on CNBCTV18. We've unfortunately run out of time, but the big factors here, rebuild consumer confidence, and rural demand, of course, is up. That is what this panel is saying. Thank you very much for joining us here on CNBCTV18. The news continues on the other side.